Hello, traders. Welcome. How are you? Anna Gishelle's here and welcome. Happy Wednesday. Happy Hump Day. Today is April 1st, 2026, almost 8 o'clock. And this is our Mondays and Wednesdays. I'm going live doing Market Secrets series and going over different types of information with technical analysis and some market secrets, if you will, about the market and help you become the better trader. Um, before I do all of that, what I'm going to do is we'll give about 30 seconds for people to join. And if you can hear me, just to confirm my audio is good, please let me know in the chat. That would be great. And then we'll get right to it. I want to also be sure that I show my disclaimer. I want to make sure I do that too. So give it about 30 seconds and I'll get started. Oh, and you know what else I noticed is last time, okay. Last time my audio was awful. I was watching the recording and it was very difficult to hear and my mic was turned the other way. So let me know in the chat um if we are good there with audio. Awesome. Thank you so much. D. Woohoo. Thank you. All right. All right. So, some good things for us tonight. Okay, last session we talked about how I decide if a setup is worth taking, but tonight we're talking about something just as important. How I recognize when a move is actually a trap before I risk money. Because breakouts happen all day, but not every breakout is real. Many of them, as you know, are liquidity grabs, and we'll go in and I'll give some real life examples of what liquidity means. You know, um, analogies. Oh, I probably said that word wrong. Analogies, analogies of what that word means, because I myself would get tripped up on that word. What is liquidity? Why do they call it liquidity? I did this whole research project on it, and we have some other words and other ways to look at it so we can understand it better. And then my promise to you for this session today is then I'm going to show you how I personally recognize liquidity grabs on small time frames and what I wait for before I ever consider a trade. Okay, so some good stuff. Next, I'm going to be conscious and show you my disclaimer real quick. Let me do that. Remember, this is for educational purposes only. All right, good stuff. And um, before I share my chart, we're going to be using Bitcoin. We're going to be using Bitcoin as our asset to show I am a Bitcoin trader. I also trade NAS 100, and I have been trading those two assets, goodness, since 2019. So, for a long time. And I'm interested to learn what you guys trade. And how long have you been trading for? Maybe you guys have been, maybe traders have been trading for a long couple years now. Maybe you just got into it. If you just got into it, wow. Let me tell you, you guys are in for such a treat, because when I started, and a lot of other traders that I know that I'm friends with, I know from when they started, it is a whole new field out here for you traders, for us. And I mean that in regards to funding opportunities. I remember when I first started, I was with this one, I don't know what you would call it, an academy, and it was online, and they were not allowed to talk about prop firms. So when I started, I was using my own money and going through it heavily. And we weren't they weren't allowed to talk about prop firms. So it wasn't, at least the community I was in, not many traders were using the prop firms. And then if they did, it was kind of like on the down low. It was like offline. And but now, my gosh, look at it. There are so many opportunities for you to be able, as they call it, get funded and not use your own money, but use someone else's money. Of course, there's a split involved. But now it's just, there's so many different options for us traders to be able to see which broker or which company, aka company, we want to use. And so the niche here for trading for day traders in the past 6 years has changed tremendously. And it's pretty exciting if you're starting now, because you kind of didn't have all the aches and pains that we have. But I have to say that I have not found a platform, a mobile platform that I find so easy compared to MetaTrader. MetaTrader 4 and 5, I remember that's what we used to use all the time. And that app, that for your phone, oh my gosh, it is so easy to use. And I wish these new companies that, the prop firms, I wish they would offer a platform like that, a mobile app that was so easy to use. One of the brokers that I use, ugh, using it on the phone is, it's because we want to be in and out. It's like driving a spacecraft, and it's very frustrating, and it turns you off, and it's just like, oh, if I could only have the MetaTrader, something like that, that type of functionality. And also that brings to my mind is, I have a video, traders. I those that know me, I have a video from how to place trades in Bitcoin that I made for the group that I was with, for the trading community I was with. And it was when Bitcoin, I want to say, when Bitcoin was at like 13,000. I came across it downloading my all of my memory off of my phones and stuff. And I'm like, holy moly, are you kidding me? And sure enough, I was showing how to place trades or move stops in a profit or whatever it was. And it was when Bitcoin was at like 13,000. What I'll do is, our next class is going to be on Monday. Monday, let me see when Monday is, what date that is. Monday the 6th. I will show that MetaTrader video for you guys, so you can see how, like, wow, look at Bitcoin when it was back at so low. But anyway, super excited for tonight. Super excited for tonight. We're not going to be on long. I did end up starting the session for tonight. Not at 7:30, but we will be getting back on track. Mondays and Wednesdays, 7:30 Eastern Standard Time, um, doing market secrets. And then also, I think what I'll do too is use another asset. I like to use Bitcoin. That's just because I like to trade that. But anything I really show can be applied to any asset. You'll see that it's transferable information. But Monday, how about we do gold? How about we do gold? So I'll teach the concept on Monday about on gold. Okay, so let's go ahead and go check out my hair. Sorry, guys. Um, let's go ahead and get in today's session. So I'm going to show you, I'm going to give you an outline first. We're going to build the story of liquidity grabs on small time frames and then identify the trap and then reveal what to look for. And then I'll go into what I do. Okay. Sound good? And then I will share some analogies to understand the concept of liquidity grabs. I think you'll really enjoy that part. And then we'll close with some questions. Just 3 questions for you guys. Okay, so don't plan to be on long, probably about a half an hour. And I want to thank you for joining me and for your time. And I just realized I was not staring at you like I am now. I was staring at the chart. So I apologize for that. Okay. And then hopefully as well, goodness, I'm looking at my other monitor, which shows me. Also, I noticed I'm much was way closer. I hope that gets better for you. But hopefully, the mic is coming across well. So if D, if you could let me know we're still good on audio, that would be awesome. Okay, so I'm gonna go ahead and share my screen just a second. Okay. All right. Now, let me change my view. Now, for some reason, my camera, I have to change it. I'm not going to do it now, but on this view, I have to lean this way. So I'm in the center of that circle. So hopefully I can talk like this. All right. So this is going to be our outline. And first, let's build the story. Let's build the story on liquidity grabs on small time frames. So what to look for is price mix equal highs. Traders see resistance breaking, and then traders buy the breakout. The trap. Price spikes above, stops get hit, buyers enter. All right. So what does that look like? And maybe some of this stuff traders you've seen on other YouTube traders sharing how they identify liquidity grabs. But what's really cool about this space is that everyone teaches differently and says something differently. And so I'm hoping that I'll be able to help you tonight. All right. So here, liquidity grab. What I want to do is I want to show this as if we're a scalper. Okay, we're on the 1 minute because that's my um that's my area that I'm really good at is scalping. And so I want to show you that on scalping the liquidity grabs. Some examples. Okay. Now, what I do for New York Open is I'll show you what I do. There you go, 9:30. Go to. All right. I'm not going to follow that outline, but I just want you to see in real time. You should see my desk. I'm going to have to take a picture from behind because I got lights, action camera, and I got this tripod right in my way. So you'll see me moving my head. All right. So here is 9:30 for New York Open today, based on the liquidity grabs. So what I like to do when I'm scalping is I do a couple of a couple of things. It depends on what I want to do for that day. But sometimes I'll take a trade and I'll have the whole trade use my max loss per day. So that gives me one opportunity. And then sometimes I'll break up my max loss. So my max loss is 160 bucks. So I may break that up into divided by 4 so I can have 4 opportunities. But that means that I might have to get out way more often if the trade doesn't go the way it needs to go. Or maybe I'll just do 2. Or maybe I will just say I'll do 160 twice for the day. But the reason I say that is because, in regards to finding where the liquidity grab may be, I might not want to waste one of my tries on a liquidity grab that ended up going the other way. Okay. So, and that goes to this information here. See if we can lift this up a little bit, read this. Is price makes equal highs, traders see resistance breaking, and traders buy the breakout. The trap, price spikes above, stops get hit, and then buyers enter. So what I'll do is on like section number 2, the trap, so I don't get trapped, is I'll go to the 15-minute time frame. I'll go to the 5-minute and the 15-minute time frame. I'm not going to do it now because it's going to take time to do all that and get back here right. Or you know what I could do? Maybe I could do this. Let me duplicate this. It's always cool. Oh. I'm like, why is that up there? It's always cool to see how people use their platform. Okay, what else? So we're over here on the 1 minute, but then I opened up a new tab and I'm going to go to New York Open so that way I won't lose um, that time for the 1 minute. And now I'll go to 9:30, go to. Okay, and then I'll drop a line right here. Okay, that's the 15-minute. My 15-minute, I color code my stuff, so that's orange. And I got that from my mentor, my old mentor, Lee Allen. That was her colors. Okay, so this is 9. Oops. This is 9:30. Okay, where this line is at. So what I would do so I don't get hit with that liquidity grab is I'll go to this hadn't happened yet. So I'll go back and I'll look for let's see, this is 9 o'clock right here. Let's see, what's this? Let me move this out a little bit. That's 8:30. Yeah. So I'll look in this location on the 15-minute time frame and I'll be like, okay, price could come back to here for liquidity grab, or price could come back up to here for liquidity grab. So I'll mark these areas of where she could possibly go. And if it just wicks up to this locations and then reverses, then I'll consider if I need to get into that trade. If it breaks through this location, then I'll be like, okay, now we need to think about if we're going to take it for the buy up. Then I'll go to the 1 hour as well. And on the 1 hour, I'll look for other support and resistance levels too, where it might just go up. And what's going on there is the institution players, the ones with the big money, that they can't just drop their orders in where they want because they're not going to get the price that they want. It's going to disrupt the whole market. So they have to drop in their orders at different places in the market. And that's your liquidity grabs. And that's the other words that we'll get into later in this class. What other words you can use liquidity grabs for. But So I'll go and look for the other higher highs, the other areas of support and resistance. Now, something here at 9:30, that says 11 o'clock. I'm not sure what happened there. Uh, let's see. Let me go over here. Here's 8 o'clock. So it's down here. So I'll be like, oh, okay, she might come back up here for a liquidity grab. But that might not necessarily be true either, because that's a lot of points. That's 500 points. That's not going to be a liquidity grab for the 1 minute time frame. But just giving you a broad picture of kind of what I do when I look for areas where it could, price could at New York Open go to that location and then turn around. So I'll have those areas marked on my chart so I can be conscious of that. Okay. That's one thing I do. Now, um, this is, we're back on the 1 minute chart, and then this is 9 o'clock. All right. Now going back to our little outline here. Okay. Um, Now let's look at number three, the reveal. Price falls back below the level, structure fails, and that confirms the liquidity grab. So let's see what that means. Let's see what that means. So here we are, 9 o'clock. Okay. And this is Bitcoin. And is this 9:30? Okay. And then 9. Okay, so let's go here real quick because we're going to actually see what I was saying, and we're going to identify that area. That's 9. So I would say right here, let me draw a line. And I would say, okay, this is a strong area right here on the 15 minute. And that was 68,678. 68,678. 68. Oh, for some reason my things are moving over, which is great. So here at 9 o'clock, I would have this identified at 9 and be like, okay, this is the area that she could go to, but that's on the 15 minute. And that's a large liquidity grab. For Bitcoin, that would actually be a move. She's not just going to wick up that far up. So that's why I'm glad that happened. Because then what I'll say is, okay, where else on the 5 minute that's closer is other areas of support and resistance? Okay, because that is a large liquidity grab. I mean, you can actually take a trade off of 300 points. So, what's a little bit closer than way up here, you know? And we have to go to 9:30 at that time to actually see it the real time. Okay. Oh, no, I'm afraid I'm on the wrong one. All right. Now, here's our 5 minute, and this is 9 o'clock. Okay. And this is 9:45. So this is 9:30. So let's say about 9 o'clock. Okay, 9 o'clock. I'm looking at the market, and I'm like, at the open, where could she go? At the open, this is at 9. Where could she just go up to and then turn around? Okay. And I'd like to see that better on, at first, I do 3 filters. At first, I like to see it on lines. So I'll be like, oh, right here is the strong level, a lot of support resistance, but that's that 15 minute one. So is there anything closer? Anything closer? So maybe right here, right? Right here, you see that? This zone right here, she might run to there. So you could do that on your asset. You would go to the 5 minute and look for some support and resistance levels. Um, on the lower time frames of where she might run up for the liquidity grab and then turn back and actually go the other way. And then we know what's happening there is the institutional players are really just trying to get a better entry and unload their money that they want to unload. So maybe she's that's a green, that's a buy. So maybe she might run up to here and then fall back down, right? Or come up here, and if she breaks this level and then continues up, the next zone I know will be right here. Okay? That's filter 1. That's filter 1. Filter 2 is this cool indicator. Lower highs, higher highs. They already tell you where they are. I'm just getting used to these. I wasn't taught higher highs and lower lows when I first learned to trade. So I did the first filter where I just look with my eyes. But if you don't want to do all that, you're like, girl, why do I got to do all that? It tells you right here. Then, yes, you could just say, well, it might go right here. That's another, see, that just proving myself of what I'm teaching you that it actually is in line with the indicators. So you could use the indicators as a reference if you want. That's filter 2. So, um, I say, okay, here she is at 9. She might come back up to these higher lows, liquidity grab here, and then sell back down. Then I say, okay, if she wants to just sell, what's in my way where it's a fake out and she goes down to grab a sell of liquidity and then go back up to these zones, you know? I showed you the buy, but what would the sell be? This is after 9:30, so this doesn't count. I would have to look to the left and see. I know price right here at 8:35 was down here. If I look at it at 9, let's see, let me get the candles right. So here's 9 o'clock. So I say, okay, if she sells down more, um, where could she just grab something and then go back up to? And we would use the same concept as we did with the higher time frames. I would look over here. Here's a higher low. Maybe she's going to tap this and then go back up, which looks like she did. You see that? She wicked it and then went back up. So that's on the 5. So I look for closer amounts. Now, let's clean this up a little bit. And let's go back to our 1 minute. Okay. And now we'll talk about the scalping part. So let's see what time this is. 9 o'clock and 9:10. And she did go ahead and go down. Let's see how much that was. This isn't really a liquidity grab for me. Maybe for other traders it is, but we have several candles moving down to this location. When I'm thinking of a liquidity grab at New York Open, I'm thinking of like the first 3 candles. You know, it goes up one direction for first 3 candles, real a lot, and then reverses. Okay. And this is where I want to bring in us, turn our attention to step 4, because this is what I care about. This is where I start making my decisions. If I start seeing how the EMAs hold the price, I start looking at structure on the current time frames and higher time frames. I check that the location, and I also check the location of my 800 EMA on the lower time frames. Then I make my decision on which direction to take the trade. So the liquidity grab gives me information, and then the structure afterwards gives me the decision. Because let's say this was 9:30. This is a great example. This candle right here, we're on the 1 minute, it shoots straight up, and then what happens? You know, it went the other way. That, my friends, is a liquidity grab. What is going on? What does liquidity grab really mean? It's the institutions going up to get a certain price, bring price to a certain level, bring the market to a certain price where they can go ahead and fill their orders. Another way that you may hear about it is, let me get my little notes out here. Is see. What do we have here? Um, where they're looking for inventory, where orders are waiting to be filled. The market goes where the stops are, or the market needs fuel to move. Maybe you've heard those type of terms for other words of liquidity, but as we learned in our other session that we had last week, we understand what's going on. So this right here is a perfect liquidity grab. Look what she did do. She went up to that 15-minute level that we identified and then turned back around. Went up, got the orders that they wanted, and turned around. So when I say down here, liquidity grab gives me the information, and then the structure afterwards tells me the decision. So when I say structure, what I mean is after she did this complete reversal, what's happening? Does she continue to go up and buy, or what is she doing? And as I see that she continues she continues to sell, doesn't continue with that direction, I then make my decision. Now, notice here too, we had this blue line. Do you remember what that was? That was another support and resistance level that we saw in the 5-minute time frame. So she's respecting this. So this is building structure now for me. And that structure is helping me form my decision. Okay, see, we're down here on the left. That structure now helps me form my decision. My decision of, is she going to buy back up or is she selling back down? So those are my main confluences that I'm using right now immediately to make my decision. Then I use my stochastics if they're overbought or oversold. I use my fib levels and I use my pivot levels. So I use other information to tell me which direction I want to trade it. But since we're talking about liquidity and liquidity grabs and what happens and what they look like on small time frames, this is how I start making my decisions. So she did shoot up and then did her immediate reversal, grabbed the liquidity, and turned back around. Now, let's put this all together. Remember in the very beginning, I was sharing with you that I have a max loss for the day. Sometimes it's just one trade, or I might divide that into several trades. So I'll take my total that I've allowed for myself to lose for that day, and I'll divide it by how many trades I want to be able to take. So let's say today was Wednesday, and I said, okay, I'm going to do 4 trades. I'm going to do 4 trades, and let me see. Y'all are probably a little bit better than I am. So that'd be $40. Oh boy, that's not much. That's another thing too. When you're trading Bitcoin, the depending on what broker you're using, they will get you good with the spread. So $40, 40 points would not be enough for me to even do anything. So that's why I'd have to do more than just, I couldn't break it up into 4. But if I was trading NAS, I definitely could break that up. And 160 is divided by 4 would only give me $40 that it could go against me. And that's, I don't think that's a big enough room for me and how NAS moves. Let's see what that is. That would be 40 divided by, if I did one contract, that would be 20 points. That's 20 points. That could be okay, but not the best. I might need some more. But what I'm saying is that if I used right here at, let's say this was 9:30, right? And I saw this huge move. I don't know if I could be in that if I was on the lower time frames, like the 15-second. I definitely would be in that. Um, I could say, okay, I'm going to use one of my chances for if this isn't the liquidity grab and this is the actual move. then I would have got burnt out and lost my one chance because it went the opposite way. Okay, so then I had another opportunity. So I say, oh, okay, that was the liquidity grab. Now let's see what she does. And then now I can start making my decision based off of the structure that happens after the liquidity grab. So, traders, I want to make sure um, that you are putting together on your playbook, on your checklist when you're trading. If I see a liquidity grab and I can see that it is because it's not continuing in that direction and it starts to go in the other direction, what type of structure is setting up for me to say, oh yeah, it's starting to set up to just continue to sell? You know, what type of structure? And that structure is, for me, what I use is my EMAs. Okay, that is my structure that I'm using to let me know if, yeah, she's setting up to go in that other direction. So let's go ahead and show you what that means. I showed it to you, but I wanted to really emphasize that. So the structure that's being shown is right here. The structure is right here. Right here is the structure that's being made. Why do I say that? Because one, we're under the 5 minute support and resistance level. Okay. But more importantly, this um, line here, this black line, that is my short term trend. And she's respecting the short term trend. So that then there tells me, okay, she is respecting the short term trend. Now, the second thing that I would identify of what's going on is this line right here. And this line right here is my 800 EMA. And you'll see that I talk about that down here, right here. I check the location of my EMA on the lower time frames. That's important, traders, because if she ends up going below and opening up candles below the EMA, then I know I have a nice sell trend, a sell trade available to me. So that is the structure that I'm talking about. Now, that might have been a little bit not organized and thought and communicated well. So let me run through it again. Price went up, then came back down. I saw it hit my structure right here. I saw it structure right here, and I saw structure right here. So I could be very confident after this candle here that I could take it down to the next level of support and resistance, which would have to break this zone, which it did. I could take that trade. Okay. I might wait. I might wait on this 800 EMA, which is the 800 on the 1 minute, to be broken. And I know I could trade down from there. This is a very high probability trade that price will continue to sell. And it did. And it did. So, let me see if I can measure that for you. So that was 200 points. 200 points. So that there is the breakdown of how I identify the liquidity grab. So that was not at 9:30. The market opening up for a scalp, but it's a great example of a liquidity grab. That there is a liquidity grab. Okay. Now here is 9. Okay, let's go to 9:30 and see if we have a liquidity grab. So we're here at 9:15. Let's say we're getting ready for the open. And we're like, okay, where could she go for a liquidity grab and not go in that direction? Well, I would say immediately she could go back up here and retest this. Now remember earlier in the session I was saying that the 15-minute that was really too far away, But now it's not too far away. And the reason I say that is because she already went there on this candle here at 8:44 to test that zone. So then that tells me that's not too far away now. She definitely could revisit that for the open, do a quick liquidity grab again, and run back down. Okay. So I'm just carrying that information over um, that I used in the very beginning. Remember, in the very beginning, I was on this tab and I was identifying where the 15-minute where I saw a lot of support and resistance with the lines. See, we have it dotted out. And then I was like, oh, that's kind of far at that time frame. And then we went down to the 5-minute and we found areas on the 5-minute where she could possibly go at that time, in that exact time when we were looking at the market before the open. So then that brings us down to where we are now at New York Open. And we know that she already did a liquidity grab there. And now we need to be conscious and we're like, okay, we got to get ready for open. And here's 9:23, 26. Okay, here we go. This is her being a little jabby. And I think what we'll do too is we'll look at a NAS. I could probably even bring up a gold. Let's do a gold one because I know my one friend's on and she does gold. um, let's see. So here's 9:27. Not 9:30 yet though. Okay, here's 9:30. 9:30 goes in for the sell, and what happens? Nothing. A complete reversal. Then goes back up. Doesn't really take off, does she? She ain't taking off until 9:40. 9:39 is when she makes her move. So from 9:27, let's go to 9:30 at the open. From 9:30 until 9:39, so 9 minutes. 9 minutes. We don't know none of this was going to happen. We don't know none of this. So this right here, this candle really looks like it would continue to go ahead and go, but it doesn't. So is that a liquidity grab? Is that a liquidity grab, traders? Or is that just a move? Is that a liquidity grab? Or is that just a move and it hasn't decided? I would say that's just a move. I would not say that's a liquidity grab. We do have a wick down here. We do have our 800 right here. We do have later that it made a lower low, but that wasn't until later. So I would not call that a liquidity grab. I would call this is in consolidation, trying to go ahead and get itself together. Now, here where the real move happened, it this is a liquidity grab on this candle because it was all the way up to here and then the market was able to push it down and sell it. But at one point this was all buying. This was all buying, and then you had the reversal. And what was it trying to buy to? Look, that 15-minute where it tapped before. So that whole logic that I put together for you about how it could go back to here, it did. That is your liquidity grab again, but then it ended up reversing immediately, not continuing to buy. Structure now is all set up. We have nice strong candles. We have the 200 here, it's going under. We have it pushing through this 5-minute dotted line of support and resistance. We have it going over the 800 nice and smoothly. We have nice, huge, beautiful candles. This is at 9:40. And we also have another, my Exodus cross sell telling you to go ahead and get in that. This is structure. This is making a definite decision. We gathered the information. We saw what happened. Um, if I had two opportunities on this and I didn't wait to see what happened, because what would happen is when I'm looking to see what would happen before I actually get in, I would be saying, now this is very important. Very important. What I'm saying is when it's 9:36, nothing's going on. And I'm looking to see if we're going to have a liquidity grab to this 15-minute time frame. Well, then that's what I'm looking for. If it goes up to this location, breaks above and continues, or maybe comes back down to test it, then to bounce off of it for the continuation of the buy up, then that's my structure. That's my entry. So before it does this, I'm saying, okay, let's see if it does a liquidity grab, which means let's see if it goes up to this location and turns around. So we waited, we saw it did turn around. Okay, we wait on the next maybe 1 minute candle because maybe it will turn back around and go back up. It doesn't. You have this nice strong candle. Now you immediately, for me, need to be in this trade after this second candle. Nice huge candles. Everything is supporting for the sell down. We're at 9:40, good time of the market too. That would be your see if you have very high probability trade here, so you would be in that and taking that trade down. So that's what I'm saying to myself ahead of time. Okay, I'm saying let's see if it goes back up here, test it, and see if it reverses, and it did. So that's a textbook liquidity grab. All right, that's big. That's with the liquidity grab on Bitcoin right at the open. Now let's go to later in the open. Let's say say you're a trader that waits until 10 o'clock. You don't trade until 10. Let's see what happens at that low time. So we're going to go 9:45, 9:50. Okay, here's 10 o'clock right here. 10 o'clock is right here. Now we're looking for a liquidity grab. Well, where could that grab be? Where could that grab be? The grab B could be to your lower, remember the higher highs and lower lows could go up to here, or it could be the 800, or it could be this 5 minute again. Okay. It could be all of those areas. So you could wait to see if it goes to those locations, see if structure sets up, if it broke above it, and then it's able to hold it, then your structure is forming. Remember over here, the liquidity grab gives you information, and then the structure after that gives you the decision. So it did come up here. It did come up here, but the structure's a bit unclear. A bit unclear. Comes back down. And at this point, traders, I'm not saying let's see if it's going to do a liquidity grab. Okay? You might be trading that way, but I don't trade that way. I really look for the liquidity grabs at the open when I'm scalping. Otherwise, I'm defaulting to um, support and resistance levels, pivot levels, fib levels, and my Exodus cross. But all of that for confluences that I'm looking for could be your liquidity grabs. Because maybe you're a trader where you're like, well, I want to wait till it comes back to this area that you were saying was liquidity and see if it can stay above that. Or other traders may be like, well, I want to wait till it comes up to that your 15-minute zone and see if it can break that. Or that's my that's going to be my target for the liquidity zone. Like if it does go up there, then I'm going to buy up to here and then that's where I'm going to take profit. There's so many different ways that you could play this and name it and you could kind of be correct. But for the sake of this class and how I'm teaching the liquidity grab and how I use it is off of what I just showed you. Okay, I hope you can digest that. And let's go ahead and look at gold. Look at gold. And we're going to look at gold and see at 9:30 for liquidity grabs. So we're going to go Wednesday. Goodness. I'm going to go before. Remember, I did this before the open. So I'm going to go to about 9 o'clock. Okay. I'm going to go to 9 o'clock and I'm going to say, where could it possibly go for a liquidity grab and then reverse? Or go down and sell down and then reverse. Okay. I'm looking for support and resistance areas in those locations. So right now we're at 9 o'clock. If I wanted to do the sells, I would say, well, definitely down to this 800 could be a point. She could sell back down to there, do the quick liquidity grab, and then jump back up. Okay, that would be my first thought. Then I would go to the 5 minute. Hopefully it stays at this time. Okay, here's 9 o'clock, and now we're on the 5 minute. So she's going to do a liquidity grab and then reverse back up. I would be looking for, I see a lot of support and resistance is right here, this higher low. So I would say, oh, okay, she might come down here and then reverse back up. But if she does come down here and then breaks below it, then I know we're in a sell. But that could be your identifier. She could come down here. Let me do a thing here like this. She could come down here to this level and then flip around and push way back up. That could be my liquidity grab right here, right this zone. That could be my liquidity grab for the sell. Now, the liquidity grab for the buy, I'm looking for a lot of support. A lot of support. You have a higher high. You could just use this one if you wanted. Could use just that one. But I would be looking for me. Like I said, I was honest with you. I don't really use those that much. I do like having them on my chart though, because I start to learn what they look like. Um, but what I would be looking at is just my eyes. It actually is this lower high. It would be that zone. It would be this one right here. So I would say, okay, she could come up to here, or that should be green. She could do a grab here for the buy, or she could do a sell grab here for the sell. So she could come down here and then push back up to buy, or she could buy up to here, liquidity grab, and then sell back down. Okay, that's how I would look for my liquidity grabs. Um, okay, so that is how I would identify it on gold. Okay, now let's see what kind of candles we got. Okay, let's see what's going on. 8:45. Let's see what happened. We'll play this out. Oh, pause it. Goodness, that thing goes fast. Pause, pause, pause. I think I paused it. Okay, now look at this. All kinds of liquidiness. Look at this. All kinds of liquidiness. Okay, so she did. She went up to here. Um, let's see if we can see our old marks. Yep. Okay, here's our old marks. We said that she could buy up to here. She did go up to this zone. Now we have, after she went up to this zone, do we have structure? That's your next question. Oh, shoot. I kind of moved that around, didn't I? Do we have structure? We have consolidation, but it is respecting this level here. But I'm not liking that. I don't know if she's going to keep buying up or not. So it didn't do something like this, like up, here's a liquidity grab, and then turn back down. We don't have that here. So is she going to buy? Mm, I really want it to break above this level for confirmation. Okay. For the buy. I'm liking the right now. It's hard to say what I'm liking because that's a nice candle there. My next thought would be, what time is it? It's 10 o'clock. I have not traded gold in I don't know how long. Okay. So what she ends up doing is buying up. So she got out of all of this consolidation. Liquidity grab. You could say this is the liquidity grab here with this wick here. But now I'm not in liquidity mode thinking. I'm in actual trade mode thinking. So that's how I see gold, and that's how gold had played out. Okay, so um, let me go ahead and start to wrap this up. I hope these were some good examples for you on liquidity grabs on smaller time frames. But let's talk about now, real quickly. I need to go back to my chart and get my layout right. Let's talk about, as I had shared, what are some other words of liquidity, and what are some questions that I have that I want to ask you, and some analogies of liquidity. So what I'm going to do is I'm going to share my chart. We have about 10 more minutes and then we'll be done. Okay. All right. And I also have a checklist for you. Okay, just a second. Excuse me. Mm, Okay. I'm just making sure. Okay, there we go. All right, let's look at this side of the paper. This side, the left, right here. Okay. Here is questions I want you to think and ask yourself. When price breaks a level, how do you know it's a real break or just a trap? When price breaks a level, how do you know it's a real breakout or just a trap? When price breaks a level, I ask these three things. Did it hold? Did price move? Did structure agree? Meaning, did price keep moving in the same direction without stopping or turning back? So that's what I use, and that's what I had just showed you. So, maybe something like this would be helpful for you, asking yourself those three questions. Okay. Two, that question number two. And then here is a trap checklist. Here is a trap checklist. When price breakout or a trap. When price breaks a new level, ask yourself, did price hold above or below the level? Yes, possible real breakout. No, possible liquidity grab, like we just showed you. Remember that we went up and then turned immediately around. Second, did momentum continue or stall? Strong candles continue means strength. Small candles or wicks, it shows weakness. Number three, did EMA support the move? Was price holding above this EMA? Any EMA you may use. I don't know. A lot of different traders use different EMAs. So, whatever EMA you use for your trading style, is price able to hold above it? Then that's showing strength. If it's losing and the EMA can't hold it, then that's showing weakness. Number four, did structure continue? Higher highs after the break, did that happen? Then that's going to be continuation. Or did it fail to make new highs? Then that's letting you know as well that it could be breaking down. Number five, did price quickly come back inside? Yes, likely a trap, like we saw on that one, on the Bitcoin one, where it went immediately up and then turned back around. or no, then if it didn't do that and continues on, then it probably likely is that move like we saw in that last example with gold. Okay. All right. Now, I thought I had a third. Oh yeah, here we go. Third question. Now this one builds discipline. Do you enter when price breaks a level, or do you wait to see if it holds? Do you enter when price breaks a level, or do you wait to see if it holds? Most traders enter on the break. Professionals watch what happens after. I found I do both, but what matters is when I do each. Okay? So, as I shared with you in the beginning, I sometimes have break down my stop loss for the day into different amount of trades. So maybe I will take the breakout because that not the breakout. Maybe I will take the liquidity grab because it might be a lot of points and I'm okay with that. And I can go ahead and just get out when it turns around. Like that one move that we saw with Bitcoin, it was a lot of points. It was 200 points up. But if that was a NAS move, it can do a liquidity grab and go up like 40 points and then turn around. 40 points. Well, that's plenty enough for me. I'll take the liquidity grab, you know? Or that's if I want to take liquidity grab. If I don't want to take liquidity grab and it ends up reversing on me and I get in late, then I can't necessarily get all that I wanted because it turned around on me and might have hit my stop loss. And then that means one of my trades that I took, now I'm down. I only have 3 more trades I can take for the day. Okay. And then last, pro question. Are you trading the move or are you trading the reaction to the move? That one usually makes traders stop and think. So you either have a strategy for the liquidity grab or you just wait till it's done. So tonight, I would like to be able to, let me see something real quick. Oh, cool. I don't have to stop share without talking to you. So, I went over a couple different ways that you can play the liquidity grab and what to look for and what's going on. Now, let's talk about some analogies of that term liquidity grab. And that way, it'll bring this all, uh, package it all together into a nice understanding so you can go ahead and have yourself some confidence. So, I think I really enjoyed this last part. Let me go ahead and get my notes correct. Oh, that's right, too. We had other words for liquidity we were going to go over. Okay, I guess I didn't print this part out that I'm going to share with you. Um, Let me go over first the other words that you can use for liquidity because I think this is really good. Um, I hear all around on the different YouTubes and even the channels I watch, they use that word, and I just don't think they've explained it enough. So I hope this sheet will help you. Let me bring it up. Okay, here we go. Other words for liquidity. You say orders, stops, money, fuel. Like it's the when the fuel word would come by, like they're going up to get more momentum for the trade. If you didn't really want to know the logic behind it, positioning, trying to go and get more inventory, more orders. Fuel, the market needs to fuel the move. Orders, price moves where orders are sitting. I know that's a very common phrase that's used to replace liquidity, or what liquidity means. It's where orders are sitting. Stops, the market goes where the stops are. um, Money, price moves where money is positioned. Okay, that's all different words for liquidity, but what it means. But then the deeper meaning that I went into last session was the market needs, the big players need to be able to move their money without being seen or without them getting a bad price for when they wanted to get in. So they need to unload it at different levels. Okay, And oh, you know what? I wasn't sharing my screen off those terms. Oh, okay, there you go. And we've been going for an hour. Goodness gracious. All right, let me do these last part. I think I really like this. And let's see if I got it right. I don't want to pull up the wrong form on my analogies. I think I might have accidentally closed that. I did. Just a second. Oh, let's see. Man, I think I accidentally got rid of that sheet. Oh, what a bummer. Oh, let's see. Oh, man. Man, oh, man, oh, man. That's a bummer. Let me see. Nope.
Hey, take a look.
All
Hey,
right, just a
take a look.
second.
Hey, take a look. Hey, take a look. Hey, take a look.
Oh, let's see if this is it. Nope. All right. What I can do really quickly is see if I have it here. I had them compiled.
Hey, take a look.
Yeah, here they are.
Hey, take a look. Hey, take a look.
All right, just a
Hey,
second. I'm going
take
to
a look.
paste them into this document. It's really cool, so I think it's worth seeing. Give me about a minute. I don't know where I put it. I'll give you these two. I had three, but I'm making you wait on me. Okay. Here are some analogies um, that are explain liquidity. All right, so let's look at this. I'll read it to you. Imagine you're in a relationship. This is a relationship analogy, the emotional manipulation game. I think you guys might like this. Imagine you're in a relationship where your partner knows exactly how to push your buttons. They know your insecurities and how you react when they bring them up. So during an argument, they throw out a provocative comment just to get a reaction from you. The stop hunt connection. The market is like that
Hey,
manipulative
take a look.
partner. It knows where
Hey,
most
take
traders
a
are
look.
emotionally vulnerable.
Hey, take a look. Hey, take a look.
Sorry,
Hey, Hey,
This is
take a look.
Bitcoin moving. Let me see something really quick. Oh, it's because we had that one up. I'm gonna have to mute this. I apologize. Okay. Let me start again. Um, Imagine you're in a relationship where your partner knows exactly how to push your buttons. They know your insecurities and how you'll react when they bring them up. So during an argument, they throw out a provocative comment just to see just to get a reaction from you, the stop hunt connection. The market is like that manipulative partner. It knows where most traders are emotionally vulnerable, just like your stop losses. It pushes price to those obvious spots, like above resistance or below support, to trigger an emotional reaction, or fear of missing out. What happens next? After you react, your partner comes down and takes control of the situation, just like the market reverses after triggering your stop, moving in the opposite direction while you're left frustrated. So that's a pretty cool example. The next one, mm, pausing for a moment because I don't want that thing to go off again. Hopefully it won't. Okay. The amusement park analogy, the roller coaster fake out. Picture this.
Guess
You're,
what? Guess
you
what?
know, I just, you can't get anything right. I tell you what. This is, I apologize, traders. Sometimes trying to do these, live sessions and it's been a minute for them to have done. I'm going to have to actually close this. Oh, that's what happened. It's on this one. Trying to do so many different things. It is a bit challenging. Okay. I think we're going to be okay now. Okay. The amusement park analogy. Picture this. You're at an amusement park and you hop on a roller coaster. Right at the start, the ride jerks forward like it's about to take off full speed, but then it slows down suddenly, teasing you before the real drop happens later. The stop hunt connection. The market does the same thing. It fakes an explosive move right at the open, the first wave, only to pull back and trap traders who jumped in too early. The real sustainable move happens after the initial fake out. What happens next? The traders who waited out the fake surge enjoy the smooth ride when the true trend unfolds, while those who jumped in early are left dizzy and disoriented. So, those are some analogies for um, the term liquidity and what's going on in the market. And I thought that was really helpful because I wanted a clear understanding of it myself. And I did this deep dive last summer into liquidity, what it meant, and helped me understand it at a fifth grade reading level. So I hope that was an interesting session for you today. I hope you enjoyed the session tonight, actually. And thank you very much for joining. And on Monday, let me go ahead and share something with you really quickly, and then we will be done. So, traders, stop reacting to the movement and start reading intent because the market doesn't reward speed, it rewards understanding. If you want to get better at reading what the market is actually doing instead of just reacting to candles, information is in the description. Okay, if you'd like to go ahead and have some one on one time with me. So tonight we talked about how market tricks traders before the real move. Monday, we're going to talk about something just as important: what to do when you're already in a trade and the story starts changing. Because entering is only part of trading, managing uncertainty is what makes traders last. All right, traders, thank you so much and have a great trading day, a great trading week. And I'll see you on Monday, 7:30 Eastern Standard Time. Be blessed. Bye bye. Thank you.